field surgeons, elite masterminds, what's going on. So this is the it's coming to the close right now. So uh, like in the video, I said that it would come up here. I thought that it would come up here and then reverse. Now I had a short arm right here, which I said I didn't want to hold for the drawdown because I had put on a short position right here. It was enough low leverage to endure this drawdown here, but I was like, they're just kind of dumb. So I just went ahead and sold and had a small profit here. And so I saw price coming up to here, but this is something that I recently looked at. And I heard ICT talking about this for a long time, but I never looked at both charts. I kind of, this is YM. This is the futures contract for Dow Jones. And so I'm thinking that maybe I'll probably just start trading this exclusively or use both of them together. But this is a gap right here. And so understanding ICT's gap theory, sell side was delivered on this gap right here. So I understand that buy side has to be delivered. So I was looking for price to come back up into this gap, which it did here. So it delivered it on buy side here. And so now it's basically a balanced price range. This price left it here. It left the whole. I would say this was considered a balanced price range, but it came back. But I think this is more accurate where it left the whole range. And so now we have to look at 50% of this gap, and I'll put it like an alert right here. And if price goes, if let's see, you can use both of these in conjunction, or you can just trade one exclusively. So what I'm thinking is, if price takes this 50% of this balanced price range right here, then it's going to go to this bearish breaker right here. Crazy because you can use both of these in conjunction, even though they move different. So if it takes that, then I see it coming up here, like I drew the squiggly line right here. I see it coming up here, then rejecting, because this is a fresh bearish breaker, so it's not just going to run through it. It's not just going to run through this breaker if you understand the structure. It's not just going to run through this breaker. It's going to reject. So you have to ask yourself, like, okay, so where's it going to reject down to? Okay, and usually it's to a bullish breaker or a bullish order block. So we do have like a breaker right here because this is the highest up close candle and the lowest taken right here. So it could come down there. This is a breaker. Hold on, quick. Yeah, it wasn't respected though. This Rebecca right here. Yeah. So I see it coming down. If it goes lower, I see it coming down, taking out the current AM session low right here. Okay. So that's kind of where I'm at right now. I'm not 100% sure, but I'm going to put an alert right here for this is a balanced price range now because price left it. It went up and down, and now it left it. So if it comes back and closes it above 50% of the zone, then it's probably going to go higher. So what I need to do now is look to the left and see where would it go higher to on this contract, this futures contract. And so look like we got relative equal highs up here. What ICT would call relative equal highs. We got the wick high and then we got the closed candle highs up here. This is a 1 minute chart. So we got liquidity above here and above this candle here. This is a close. So this is relative equal highs. So if it takes 50%, seem like that would be there that it would want to go to. And then this kind of makes sense because on the regular chart, we got a bearish breaker up here. So what I like to do sometimes is to draw it out. So on this scale right here, I'll bring it up here, and it says 88.2. So this is the distance from like where price is now. So then I'll go to YM and see if the 88, what was it? If that 88.2 matches up, if 87, we'll just put 88 points. If it matches up with the equal highs on there. So hold on. Okay, so let me measure up 88 from where price is now and see if that matches up. 88 points. See how crazy that is? So it literally matches up with the bearish breaker that's on a regular chart. And this futures contract, we got equal highs up here where the algorithm would want to take these highs out. Now, if I'm wrong and it could go lower, um, let me go on the 5 minute chart because the structure has looked like it's supporting bullish activity on the structure. Yeah, I mean, constantly making higher highs. This is a SpaceX scandal. So, yeah, this is a SpaceX scandal. So I'm kind of leery about that because usually when you see a candle like this, as long as the high is not taken, it's going to take these lows out down here. So this is something that I kind of saw. It's called a, I just call it a SpaceX scandal, Elon Musk or whatever, because it's like a rocket. I mean, this thing opened up way too high above these white candles. Um, so it could come down here and take out these lows. That's maybe what it does. Uh, so right now I'm not doing anything. I'm going to put an alert right here at this balanced price range. I see why ICT go down to the 1 minute chart because that's the only way you can see the gaps. Um, 5 minute chart you can't really see it. So I'm going to mark up 50% and then put a alert at the 50% and I'll label it balanced price range uh, breached. So the other video I shot this morning, I'm going to merge it with this one and then post it. So I'm finding the 50% of this gap exactly. I just don't want to put it, eyeball it. I want to actually zoom in and make sure it's exactly on the candle itself. Uh, and then I want to show you what's going on with GJ and EJ. Uh, just kind of happy that I kind of discovered something for myself. So I'll put an alert right here. Okay. And then I'll label it price crossing up. And then I'll put balance price range breached, BPR breach, bullish activity confirmed. So I want to put this on the 50% and then I want to zoom in and make sure it's on there exactly. Like none of this stuff is random. This people think this shit is random. It's not. So it has to be precisely there. So if price is breached right here, then I know that it probably will go to that bearish breaker. Either I could take a buy to that breaker, or I could take a buy and then take out these equal highs up here. Because it's kind of confirmation that it wants to go higher. If it fails to take out these highs up here, then I have to find the order block somewhere here on the higher time frame where it will reject. But seeing that SpaceX candle on the 5 minute chart, I mean, it could come up high like this based on my back testing. It could come up as long as they don't take out this high. I mean, it's damn near guaranteed to take out these lows down here. Based on my research on these SpaceX candles, I mean, price opened up way too high above the bullish candles. Yeah, I mean, this right here, it's like a dead giveaway. So it probably is going lower. It probably won't breach this. So what I want to do is I probably put an alert right here as well. Um, I probably need to put an alert I'm going to put an alert below this candle here. And if it takes this, then it probably will come down here and take these lows down here. So I'm going to put another alert here at the bottom of this candle here. And then I'm going to go to my folder and show you the SpaceX candle. I actually did a whole video on it as well. See that space in between there? If you don't zoom in, then you're not going to catch it. So, okay, boom. That'd be interesting to see like how this works out. All right, so let me go to GJ real quick. Okay. Uh, go to the 4 hour chart. Yeah, this feels pretty good. Like I said, in this first video, I put an alert for price coming above 50% of this range, and my alert recently went off because price went above 50% of the range. So, like I already told you in the first video, why I purchased, why I bought down here. It's my first time really doing this. It is scary, like ICT talk about. It is scary to buy when price is shooting down because you're like, okay, well, shit. What if it keep going down? Because that's why you got Fibonacci theory. I kind of explain how Jessica Lane taught it. Because look, I mean, this is the order block, but it was another one down here. And look at this. It hasn't even touched it yet. That tell you how bullish it is when it don't come down to the order block itself. They show you how bullish it is. And sometimes it's so bullish it won't even come back down. So I was thinking like, well, if I'm wrong, I was like, I probably got in too soon. It wants to come down here, but it feels good, to have caught it all the way at the bottom down here. And so the objective is for it to catch up to EJ. I should have put on multiple positions. I just put on a lot down here, but that wasn't smart. I should have put on. I should have broke it up into like 25, 25, 25, 25, or something like that. Or I could have put on multiple positions and then I could have took something off, instead of just being in that one position. But so the whole point is EJ, GJ, and CJ, they all move similar, precisely. Um, some people say, I did the advanced research, which I'm doing on a call tomorrow with somebody on my team, showing people how to do advanced research to find these correlated pairs. And so I found a way to do that. No ambiguity whatsoever. So this kind of made sense. This was common sense, based on, like I said, in the first video. This is a Fibonacci. If it don't retrace past the 38 to 50%, then most likely it'll come up to negative 27, which kind of makes sense because EJ already hit this area here on its chart. It already hit one, two, three. It already hit one, two. It already hit 2.5 standard deviation on EJ. So GJ moves similar, so it has to come up here to catch up. Now I'm not saying it's going to come all the way up here. It may fail, but to be honest with you, if price once it get about right sale, I probably get out early. I'm not going to hold to negative 27, which I probably should, uh, because it lines up with 50% of a standard deviation as well. So that's why I got in for a buy right there. It's looking good. See that wick right there? It feels pretty good to myself to see that. I've been working on it. And then I go to EJ here, just reiterating what I've already talked about in the first video. Yeah, so it's pretty good to have purchased right inside of this order block and not doing it out of luck. or you know, or being unintelligent. It was basically based on me understanding the structure and understanding Fibonacci. So being CJ, which is CAD JPY, no, Chef JPY, the Chef JPY, and so it moves similar as well, like extremely similar. It moves a lot more similar than GU. A lot of people say GU, EJ, and GJ move alike. I guess they do, but this is more accurate. CJ at JPY, which is I'm sorry, Chef JPY. So you have to do your research to see that, though. I've done the research. I spent the time and study on that. It verified it. Not going to my FX book and just taking a look like I used to do. That was uh, that was a foolish move. Stop doing that if you're doing it. Uh, so right here, like I said, CJL moves similar. So based on Fibonacci theory, if it goes past the 50%, it's going to go to negative 61.8. Now that's way up here somewhere. So it was common sense to take this buy because if they do move similar, and this actually moved very, very similar, I've done the research. It took hours and hours, but I did the research because I'm like, all I got to do is research it one time. But so since it can't, I was like, it probably won't come down to the 50% because that means it will have to go up here to negative 61.8. So it probably would fail at 38.2 because based on Fibonacci theory, according to Jessica Lane, in my own research to verify Jessica Lane's claim is true, it will come up here to negative 27, which lines up with CJ, which moves similar to EJ and GJ. See what I'm saying? Like that makes total sense. Thanks for watching.